Well, what are your thoughts on the current state of the market?
Yeah, so clearly we went through this craziness, I'm going to call it. And a lot of people, so interest rates were at an all-time low, like insanely low,
Yeah.
right? 2-3% loans were kind of normal, right? And which is insane, right? Because the average is more in, the 4, 5, 6 range. So what happened is in such a short period of time, the shortest period of time in the history of the world or America, we went from here to there, right? We went to 7, 8, 9%. And so it just shocked the system, dramatically shocked the system. I'm not much of an economist, but unfortunately, it hasn't done a lot yet to curb inflation. It's sort of slowed down, took a bit of the heat off of it. So that's been super traumatic. And those things are going to, though, there's several quotes, right? The best time to buy real estate when there's blood in the streets, even if it's your own blood. This is a buying opportunity for those that are ready, but unfortunately, it is also the possibility that some deals just won't make it. And they won't make it because they didn't raise enough money, they didn't have enough money, they don't have enough reserves to cover this spread, right? So the property's still profitable, but you don't have enough money to cover the spread. And that's what's really challenging about this time.
You mean by spread, like as far as the refinancing?
That's correct, right? So now all of a sudden, because the interest rate goes below the NOI line, so you may be operating at a profit, but I'm a passive on a deal right now, and its interest rate, payments went from 18,000 to 36,000. Substantial monthly difference, like substantial, because they didn't do a very good job protecting it with a cap rate and things, and makes a big difference. And so now they're struggling, but they'll still catch up, right? They're still above water. They just got to be super careful.
Yeah. So buying rate caps, very, very common, very smart to do with floating and rate debt, which a lot of like the
Yeah,
whole bridge. A lot of operators over the last few years have been operating under the kind of like the Burr model. It's just
yeah,
been over a longer period of time, like a 3-5
exactly.
year period of time. And the market's definitely given a lot of tailwind to that. But buying rate caps and not quite stress testing it, and how likely is it that mortgage rates are going to triple over a 12-month period?
It's
Unlikely, but
insane,
it
right?
happened.
Absolutely insane. I'm on a couple of deals right now where they did buy a rate cap, but they didn't have enough reserves to cover all of it.
Yeah.
And the payment difference, and big shock to the operating system.
Mm-hmm.
Because again, you kind of bought it and never thought you'd need it. You just bought it so you had, oh, we bought it, we're safe. But if you didn't have enough reserves, and again, this crazy how fast things increased in value made people get less conservative, right? In theory, anybody could make money in real estate during the last so many years just because it was so hot and heated up. And so a lot of people did lose their core principles of, good cash reserves, good stress testing, making sure you're ready, because the rise of the market bailed them out every time.
Yeah, yeah, and that's why I've been cautious as a fund manager, focusing on operator experience. So,
Yeah.
I mean, there's a lot of operators that I know have gotten, and they've done pretty well over the last 3 or 5 years. But it really, if you've been in the industry for the last 10 years, by and large, you really don't know a rainy day. It's been a strong market, and the last 2 to 3 have been ridiculously strong.
Yes.
So anyone in that, they haven't really been tried
Yeah.
through a deep downturn.
Yeah.
And I'm not saying what we're going through is a deep downturn, but it is
Yeah.
turbulent,
Yeah.
and there's
Well,
cloudy skies. We don't know what's ahead.
yeah,
So
Warren Buffett says you don't know who's swimming naked till the tide goes out.
exactly. So I mean, we focused on like the first multifamily we did in Daytona Beach. The primary operator had 40 years of experience. It was and $1 billion assets under management
Yeah.
and 1,000 units locally. So it was a few boxes checked to show them they had the operational experience. Any company that's been able to survive 40 years, that they've doesn't mean they're guaranteed to survive forever. But they definitely seen a few things, and they've got the experience to navigate cloudy skies. So, and the same thing we were doing with Class A in San Antonio, very similar situation, 40
Yeah.
years of experience. also institutional partners like JP Morgan on board, just checks a few of those boxes.
Yeah.